Hello traders, Gary Wagner here. It's approximately 2 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, 3rd day of March 2021, and this is the daily report for gold and silver. We had a devastating decline today in gold, silver, platinum, and palladium, with platinum taking the hardest blunt of that decline. Gold lost about $20 to $24. It actually broke below $1,700 per ounce briefly, recovered, closed at about $1,713, but is now trading at around $708. On today's show, we'll talk about critical and key support levels, as well as what we're looking at in the interim future. Hope you enjoyed the show. Precious metals got slammed in the marketplace today across the board, with gold basis the April contract currently trading down $24.30, a 1.4% decline. It is currently fixed at $1,709.30, but I draw your attention to the lower low today, which actually slipped through $1,700 solid and is at $1,699.40. This first chart that we're looking at is a daily candlestick chart of April gold. I draw your attention to today's price action, with gold currently trading at $1,709.30, down $24, but it is the low that is really beckoning us to take a hard look at gold, because the last time we saw gold trade to a low below 1,700, we've really got to go back almost 9 months. You can see this white line here. That says 1698.80. The actual low was 1699.40, but for our purposes it is close enough, because you will see that the last time gold hit this price point was really back in May and June of 2020. The market was really consolidating. We had strong support roughly at about 1680, and we had strong resistance at about 1760. That's this area right here. The fact of the matter is, we had ADP's jobs report come out today, and it came in well under expectation. That's a bullish factor for gold, but it was rising yields, with U.S. Treasury notes closing at 1.47%, actually hitting a high of 1.49% in trading today, as well as Bitcoin, which broke back above $50,000 per coin, a 7% gain that I believe threw any thunder out of a potential rally in gold to the wayside. In our opening letter, we cited updated forecasts by the UBS analysts, which are extremely bearish on gold. And as we look at this chart, this is a Heikin Ashi chart with our 3 primary moving averages. We have 2 strong technical indicators that really confirm the potential for what these analysts are calling for, and that is a sustained drawdown in the price of gold. The first, and we've been talking about this over the last couple of weeks, these are 3 moving averages, and you can clearly see that the 100-day short-term has now crossed below the 200-day, only slightly, but nonetheless it is crossed. And that puts these 3 moving averages really in true bearish alignment. Bullish alignment has the lowest moving average of 200-day on the bottom, followed by the 100-day, which is followed by the 50-day. Now we have the exact opposite. In other words, we have the 200-day as the highest, the 100-day in the middle, and the 50-day on the bottom. The second thing I draw your attention to is our Heikin Ashi chart. We can see that over this last trading week, we have had strong pressure to the downside. When you look at a Japanese average chart, because the open is fixed as the midpoint of the prior day, when you have an absence of upper wicks, as we saw on the last 3 trading day, today we had a very, very short wick. Even though we have body size diminishing, and that tells us that this downside pressure is starting to lose a little bit of its steam, it is still strong. Body size was extremely large going into this week, especially with Friday's drawdown here. Today you can see that we've had body size contract just a little bit, but nonetheless, these are bearish indicators. We could see a bounce in the market, but I don't think it would be a large bounce. I would look at it as a B wave, and we'll talk about that later on this week or early next week. Silver dropped by 2.6% in a single day of trading, losing 70 cents and currently fixed at $26.18. When we looked at our gold chart, we could see that it was moving in terms of the moving averages into full bearish alignment. Now, while we are in full bullish alignment, 50-day here, 100-day and 200-day, for the first time since the middle of January, prices closed below its 50-day moving average, and that's fairly alarming. In terms of any kind of patterns that we're witnessing, we don't see any. What we do see on a technical basis is this is a pretty critical level at 26, call it 15. It is the 50% retracement level of the move from November. It's a shorter term data set from the move back in November when silver was trading at about $22 up to these highs at $30. It seems to have held for quite some time. We can solidly say we have seen really sideways trading between, call it 28.30 and 26, so about a $2 range. However, a break below this, and our next target would have to be about 25.42, and that is based on the 100-day moving average. Below that is 25.15, the 0.618% Fibonacci retracement. Another technical study that helps us gain some insight into the future movement of the precious metals, specifically silver in this case, is the Heikin-Ashi or Japanese average. Much like what we saw in gold, the last 3 days have had an absence of upper wick, and we have seen lower pricing. However, when you compare body size to the body size that we looked at in our gold chart, these are much smaller. So the moves down, although on a percentage basis are greater, you don't have these huge body size. You also have the return of a wick today. However, we did close below the 50-day moving average. While that could be a simple glitch, meaning it will come back up in trading over the next couple of days, it is something that we have to be well aware of. In terms of a percentage drawdown, palladium had the least percentage drawdown, losing $30.60. That's a drawdown of 1.29% and is currently fixed at $2,338. The leader in terms of percentage drawdowns was definitely platinum today, which lost $47.20. That is a percentage drawdown of 3.89% and is currently fixed at $1,167.20. As we spoke about in the pricing section of platinum, it did have the largest percentage drawdown, losing almost 4%. The key right now on a technical basis is the 1160 area. That's the 23.6% fib retracement. This fib retracement is from a much longer data set. And that being said, if we cannot hold this area, the next target would have to be 1135.70. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.